Greetings, this is Mentor Mike Bridges. Currently it's Sunday afternoon, April 28th, 2013 at about 5:17 p.m. Pacific time, and this is the first opportunity I've had to prepare this market movie showing Pacific Trading Academy's update for the week ending Friday, 4/26/13 here in Mentor Mike's S&P E-mini day trading course and live trading room. So let me remind you first of just how this works. In the trading room, first we trade in real time and we generally discuss observations and our rationales for entering, abstaining, exiting, reversing trades, etc. And then next in the education room, we replay the day's market movement to measure how actual performance compared to the market's optimal potential. On winners, we see if we could have entered sooner for greater profit or later for less sweating before the first target. On losers, we see if we could have filtered out the bad trade and avoided it completely, but if we agree that the signals appeared good, we determine the best damage control method, exit or reversal. So let's take a look at both the actual results and some of the replay results from this past week, April 22nd through the 26th. Here is the actual results from Monday the 22nd. Our first trade here began slightly before the open of the trading room, a little before 6 a.m. And as you can see, the dashed blue line here, the pale steel blue line, is our trend-defining moving average. So we look for red, white, and blue alignments in the direction of the trend definer. So here you can see we had a nice series of 3 bearish trades. Missed this initial transitional move across the trend definer. Caught this one, and the end result was $1,830. This is the same day. On the stochastic, we've added a few touches to make it a little more visual. And here we had trading done only during the hours that the trading room is in operation, that is after 6 a.m. So we had 2 shorts, 2 longs, and the end result here was $2,325. So this is closer to what the full potential is on this particular day, and we want to move in that direction. Now here's the actual trading from Tuesday the 23rd. Again, we began early. This first trade was about 5 a.m. You can see that the market was very bullish. We had 3 bullish alignments, nothing too out of the ordinary there. Then we had this incredible spike down. By now you probably are aware that it was someone hijacked the Associated Press Twitter feed and made a bogus announcement that there had been a terrorist attack at the White House, and that caused the market to freak out, and it dropped about 20 points in the space of just less than a minute, really. Now this is very serious business for us day traders. The position traders didn't really feel the effects because the market rebounded back to where it was very quickly. But if you got caught on the wrong side of the spike, it was very bad. Now, we actually quit after that, and when we did, we had 15.75.50. There was one good trade after that, and that was pretty much it. So in the replay, there wasn't much more to do. We had 2 trades here on the long side, skipping the one that was in the pre-market before the open, and we did take the other good trade after the spike. So the potential here was $2,000 even. And here is, I guess this is Wednesday, which would be the 24th. And this was a very sort of sideways, choppy day. Got a little more directional towards the end of the day. But we had this bearish trade, and then a bullish trade here. And the 3 together added up to $850.50. Now remember, we're using a peeling off strategy. I'm using 9 contracts and 3 targets. uniformly throughout here. And so the potential scores that you're seeing here are based on that set of protocols. Now, here is the replay of that day. It's a little more compressed, as you can see. The trades we took before are still there, but there was one other bullish trade that looked it was a little more appropriate, where the red, white, and blue MAs were breaking above the now slightly upsloping trend definer. So the difference here was a score of $1,300. Now, this was Thursday, and you can see we had essentially a bullish day that was interrupted by this substantial pullback, and then there was a change of direction near the end of the day. We had a long, again, this was very early. This began at about 5:30. One short here that was good for one target. Now, on this trade here, let me just point something out. Because I missed this very nice transitional move here, I was anxious to get in and made the mistake of entering a bit late. The signals were good, but it was a bit late overall. And as a result, I had to sweat through all of this until we finally got 2 targets out of that trade. Then we got 3 targets subsequently, and I very foolishly and greedily went for another bite of the apple, and this short trade did not pan out, and I ended up giving back a very substantial portion of the profit we had. We were up about 1,400, and after this last loser, it went down to just a little less than 400. So it was an expensive bit of folly on my part. But, you know, live and learn. So in the replay, again, all the trades were taken during the trading room hour. So we had 2 shorts over here, nothing before the open of the room. This time we caught this nice transitional move, and we got a much better fill on the long trade. Caught the short trade as before, but didn't make the mistake of trying to get the second bite of the apple. So the score here was $2,050. And here was Friday. This was the only losing day we had last week in real actual trading. Again, made that same mistake of getting in too late and had a loser. Winning side on the bullish here, then 2 good short trades. This one we'll talk more about. This was a losing trade, but quite honestly, this is one of those somewhat rare occasions where I felt the signals were good and that I took them in all good faith, but it just the market didn't cooperate. Then I made the same mistake here, another late entry, and if I had stayed in this trade, I ultimately would have hit 2 targets just as I did the other day. So I wasn't absolutely required to take this loss. I could have waited it out, but I had something that I had to take care of. So I did close the trade with a loss, and then I re-entered at the point where I should have, and that trade proved to be successful. So on Friday, we ended up with a loss of $1,778. Now, the total score for the week was still a positive of $2,870.50. And that's a pretty decent score. If you average that every week for 50 weeks in a year, you'd be making about $143,525. So it's okay, but it's a lot closer to what we should be doing on a daily basis. So here is the replay of Friday, and as you can see, our score there was $1,537.50. We had 2 long trades here when the market was above the trend definer. We had the same good one on the short side, and I took this trade again simply because I do believe the signals were legit, but it just was one of those situations where the market did not cooperate. So what I did do differently, though, was a little better damage control. We got out of the trade faster when the parabolic changed direction. So nevertheless, it was about a $700 loss. Then we had 2 long trades, both of which were successful, and our score was nicely in the positive, as you can see. So let's go back for a moment and recap the outcome. This was for the week that ended April 26th. Our live trading results are on the left. The replay results are on the right. So Monday, 1830, did a little bit better on the replay side. Likewise, Tuesday, Wednesday. Thursday was a big difference because of that losing trade that knocked my score down. And Friday, of course, was quite a difference as well. So as I say, the live results were $2,870.50, which works out to a yearly average of 143K plus. But over here, our weekly would have been in excess of 9,000 and much closer to about $500,000. So this is the goal we're trying to realize. Now we did okay, but we're working to move closer to having these results, these optimal results, rather than the ones that we showed here. Now, one of the biggest problems in trading the particular technique that we use, the red, white, and blue alignment and go for the gold, is the transitional move, when the market goes literally across the trend-defining moving average. So what we want to do there is come up with a good technique. As you can see, even on the replay here, I caught this transitional move as we broke above the trend definer, but I missed this one, and this was probably a two-target trade right here. This short trade as we broke below the trend definer, and this was a legitimate trade that I should have taken. Now, how do we? What signals do we use to determine when we're having a legitimate move across the trend definer? Well, the answer is our good old drawing tool, the regression channel. Here's Friday once again, and I've drawn the regression channel from this low to this high, spanning the trend definer. And as you can see, the break to the downside, the trade that I missed, happened exactly where the market broke south of the lower channel line. And then you can see I've drawn another channel from this high down to this low, and you can see that the place to get in would have been exactly where the self-correcting moving average is intersecting with the lower channel line, and I've drawn this dashed yellow line at that point. So there was that entry, the trade that I missed, and as you can see, we had bearish gold on the MACD, and we had our new red, white, and blue stochastic pair also showing a nice bearish cross at that moment as well. Now, down here, we have this downsloping trend channel, and we also have an upsloping trend channel from this low to this high. And once again, where they intersect is right at the point where we have the market changing direction and crossing the trend definer. And I've drawn another dashed yellow line at that point. And you can see our MACD is breaking across the zero line, showing bullish gold, and we have a bullish cross on our red, white, and blue stochastic. Now, we'll be putting this technique into effect in the coming week and expect that that's going to improve our score dramatically. Now, to show you the results on our 5-minute chart, these trend channels and the vertical lines have been drawn in exactly the same locations time-wise and price-wise. So again, here you can see that the definitive signals are the crossing of the 5-minute MACD, blue and white, and where our faster stochastic has crossed our slower stochastic. So we expect that if we use the 5-minute and 1-minute charts as we have been, we'll have definite signal support for getting more mileage out of these transitional moves. So here again are the actual results versus the sort of optimal replay results. And we're constantly moving in a progressive direction, and I hope you'll come and join us. PacificTradingAcademy.com is our website, and you will find all of the information there you need to join our trading room and education room. And you can do both for an entire week for just $9.97. So give us a try and see if there's a good fit for you. You might find that this is what you've been looking for. All right, thank you very much. Everyone have a great week trading, and we'll be back soon with another recap of how things are going.